So now this is not going to be just a simple fair value gap lesson or anything like that. In this one, we will dive right to the few most important aspects from my personal playbook and what I look for. So now one of the oldest terminologies in retail trading world that I think 99.9% of you guys are familiar with, the more, let's say, support on resistance zone, rejections and bounces has, the stronger it is. Same with all of the other things like trend lines. Now, to your surprise, what comes to imbalance points, this is also one of those things. Specific imbalance points very often stay important for quite a long time. But this is the thing that people just simply miss. Whenever a specific fair value gap imbalance point gets filled, they completely stop looking at that zone. They completely ignore it moving forward. And this is one of the biggest mistakes. And now looking at this very easy example, let's imagine that price starts trading to the upside right here. It starts building these higher lows, higher highs. Eventually it runs, let's say, some buy side liquidity right here. It gives a trap. It runs even more buy side liquidity and then eventually crashes, dropping lower, running lows right here, creating this new dealing range right here. So now looking lower, let's see if we are trading with the main side, what comes to the higher time frames, what comes to the lower time frames. And let's say here we are on the 15-minute time frame or 10-minute time frame, something that's basically in the middle of lower time frames like 4 hour, 1 hour and execution time frames. And opening on this day right here, if we are, let's say, expecting for shorts to take place, we had our top-down vision nicely aligned. Everything's looking crisp and clear. We had this expansion 1 right here, then we get this expansion 2 right here. Most of the traders just simply focus on P derays that happen inside of these expansions right here, which is completely okay, nothing wrong with that. But again, remember that what we are talking about is all the imbalance points that stay relevant whenever we want some confirmation, and it makes those universal points even stronger. So in this case, what we would do, and for example purposes, obviously, if let's say you're already short from this area right here and you want a strong high probability scale in, or you haven't even taken a trade yet in the first place, on your scope as a target you have this level right here, the sell side liquidity pool. Looking left, what we always want to see is those imbalance points that already caused some rejections before. The more the better. So imagining that this low and this high is one imbalance point right here, what we would obviously do, as you guys, I think all of you remember, that imbalance points tend to act quote unquote as support and resistance levels and zones from both sides. So in this case, as price was dropping lower, notice that in this case right here, it would have ran this buy side liquidity here and here, rejected it to the downside and dropped lower, taking out the sell side liquidity right here. Going forward, obviously we are not trading it. We see price running higher, creating all of the structures right here, that as it moves and trades above it, we can see that price used now this imbalance as inverse fair value gap. It broke it to the upside, then pulled back, rejected it, and started trading to the upside again. So in this type of situation, what we would obviously do, if we had everything aligning on the downside, we would obviously take this imbalance point and extend it into the future. And notice what happens here. Obviously, with just an example, but trust me, this is repeating over and over and over again in live market. So notice that price runs lower, it reacts off of this same old fair value gap right here. It gives a reaction, it causes this pullback right here, this bullish pullback. Then eventually it drops lower, breaking this fair value gap, and then it pulls back into it, giving another rejection, which could easily be your scale-in type of opportunity or your even original entry, aiming of course for the sell side liquidity right here. So what I'm trying to say is that whenever you look left and you see that specific imbalance point, no matter how large it is, if it had quite a few rejections already and price is respecting it from both sides, short side, long side, it's causing reactions and all of that. Let's imagine that maybe even it had 2 rejections right here, not just 1, 2 rejections. Sometimes it even has 3 rejections before it goes higher. Then it gives a reaction, it breaks through, and then uses it as resistance right here. These type of fair value gaps, not only the newly created ones, but these old ones that caused a lot of bounces, a lot of reactions, a lot of rejections, these areas stay as sensitive zones for a really long time, and it really adds to the whole confluence basket type of a thing. When you're looking, let's say, for a short opportunity, focusing on the bearish beta race inside of this expansion right here, such imbalance point that had so many rejections here, 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 a reaction right here. Then price breaks it and we start looking it for to act as a bearish type of beta ray again. When we had everything aligning in that same area, and the more confluence factors you can stack right here, the better. So that's the example. Let's say if we would be talking about a bullish type of situation, we can simply invert the chart and this would be the bullish type type of situation right here. Notice that price leaves this bullish fair value gap right here, then it retraces, it rejects it to the upside, takes out this buy side liquidity right here, then drops lower, completely breaks below this imbalance, uses it as resistance for 3 times in a row. The more times, the better, of course. Then it eventually bottoms out and starts this buy program, forming this market maker buy model in this case right here, this being the sell side of the curve, this being the middle, and this being the buy side of the curve. So focusing on the buy side of the curve, obviously what we would do is wait for price to start giving clear signs of bullish or the flow of actually reversing and all of that. And notice that pushing higher, what we would see right here is price reacting to the downside again from this area, then eventually breaking above it, pulling back, and looking left, we would obviously stack how many rejections this area has. And again, this area alone wouldn't act as an only PD for you to take the entry right here. You would want to stack it with all of the bullish PD rays that happen in this expansion leg right here, from this low to this high. And as it pulls back, we would stack it with the bullish PD rays right here inside of this area as well, with your stop loss obviously covering ideally all of these bullish PD rays, or if it's possible, if it's a deeper pullback, let's say in those cases, you can even ideally cover this whole low right here. So that is all what comes to the theory. Let's now jump into the live charts a little bit and let me show you what exactly I'm talking about here. All right, so let's start with this simple example here on the euro dollar. So one thing that I want you guys to notice is that obviously after this near kill zone, here we had London kill zone, this gray rectangle right here was the London kill zone. We saw a bullish day. This gray rectangle is the near kill zone. So notice that during the near kill zone, price left this bearish imbalance. So what I'm talking about is again opening on this day right here. Looking left, we would ask ourselves, do we have some really strongly respected imbalance points or not? Now again, this is not something that completely makes or breaks your trading. This is just a strong additional confluence factor that I personally always run through and pay attention to. So trading on this day, if let's say we are expecting for a bullish day to take place, we would look left and see if we had any imbalance points that caused rejections for quite a few times. So obviously the one that sticks out right away is this bearish imbalance right here. Notice that we had 1 rejection, 2 rejections, 3rd rejection, 4th rejection, 5th rejection right here, 6th rejection. So I'm not going to count. You can see how strong this zone was acting literally as a resistance type of an area, right? It keeps on acting as a resistance area even here. Then looking forward, it acts as a resistance area again. But notice that as mentioned, if opening on this day, we are expecting for a bullish day to take place, we have everything on our side regarding daily time frame, lower time frames. Price starts bottoming out. Notice that it runs some sell side liquidity right here. It gives a shift in structure and starts building to the upside, starts showing this first signs of bullish or the flow right here. This is then obviously we start looking for potential entries. But if you are not sure yet about this entry right here, because what we have, I think you guys can clearly see, is a very strong imbalance area that's been acting as a sensitive zone for a really long time right here. Looking left, what we would even add on top right here is the fact that we had a BPR, balance price range. We just noticed that we have overlapping imbalance points. This bullish imbalance was overlapped with this bearish imbalance. So clarifying that exact point for ourselves right here, bullish imbalance filled with bearish imbalance, this is where we have ourselves a balanced price range. We can extend that area as well. So now notice what happens and let's scroll forward. So price leaves this London kill zone low of the day. It happened during the early window, which is again from 3 a.m. to 4 a.m. reversal time, reversal window, where we look ideally for strong structures, low of the day, high of the day to form. So price leaves that right here, runs sell side liquidity, gives a shift in delivery right here. This was a weak close. We could even wait forward. So eventually we have a body close right here. So what comes to classic buy days? When we have a daily stage, when we have clear daily bias for the day, and then we get London kill zone low of the day, what we expect during the near kill zone is obviously a continuation. So in this specific situation, what we would obviously do, trading further, we wouldn't know where the pullback is going to be. Their price is going to pull back exactly. But what we can notice right away is, of course, this very strong imbalance area that price been rejecting for a really long time now. So now it doesn't mean that price must specifically pull back to this area to continue higher, but this again acts as an area, as a strong support type of a zone for giving us that near kill zone continuation. So let's now go candle by candle. So now notice where price pulls back exactly. If we extend this, notice that price retraces into this bearish fair value gap right here that had many rejections and literally by a few pips taps into BPR as well. So obviously from this point, when we would get something like that, we would start looking for potential continuations. Notice that this low formed during the early RT window as well. But here during the near RT window, which is from 8 a.m. to 9 a.m. we're here, which is again there we look for key structures to take place. So price leaves this RT window after breaking through this imbalance point that had been acting as a very sensitive and strong resistance type of an area. After it breaks to the upside and starts pulling back, obviously we would identify this imbalance point inside of this expansion right here. As mentioned, we really want to pay attention to all of the bullish P rays that form inside of this area. So this includes this bullish or the block right here, this being the open, this being the body. Right, didn't reach that, but we have a zone. Then we have this bullish fair value gap as well. But overall, the very strong additional confluence factor that we just talked about is this very sensitive, very strong old imbalance point that a lot of traders would be not even looking at in the first place. Looking at this type of an area, all that we see is just a couple of rectangles, but we don't know where this is coming from. And I've been getting a lot of questions regarding my trades. What is this zone? What is that zone? So now you guys know that pretty often what I have on my charts is some old imbalance point that's been acting as a very sensitive and very strong area for a really long time, and the one that caused many rejections. Very, very often that is coming from another side of the curve what comes to the market maker models. So let's say talking about the market maker buy model, right, creating original consolidation, starts trading to the downside right here. This is then obviously what we have right here is the sell side of the curve. This is where we have buy side of the curve. So a lot of these imbalance points, those key type of imbalance points will be born when you're looking to trade buy side of the curve right here. It will be born on the sell side of the curve. And what I'm talking about is very often when we are looking for ones right here, stacking our confluences based this bullish expansion right here, looking left from the sell side of the curve, what we will often have is a sensitive imbalance area that very often will already have at least a few rejections right here. And after that, when we extend that, it will break above it, use it as so-called support type of a zone right here, and continue towards the original consolidation. So obviously market maker models is just one piece of the puzzle, but overall this is something that you can expect. If you would invert that, this would be the situation right here. What comes to the sell model, price would go higher, create bullish imbalance, leave some rejections right here, show that it's a sensitive area, eventually price will break it and use it as a resistance. So this simply becomes as inverse fair value gap. So what comes to market maker models, it's very easy to spot, it's very easy to tell. But regarding those other situations, when we are literally just looking at price action, like in this exact case right here that we just talked about, on this day trading to the upside, expecting for a bullish day to take place, like in this case right here, looking for a classic buy day of London kill zone low of the day, near kill zone continuation, many traders wouldn't even notice that we had such a strong area right here that formed during near kill zone the day prior right here. But now you guys know that you need to pay attention to those situations. You need to mark those zones for yourself and extend into the future. Obviously, don't make your charts clutter. Don't make your charts too busy where you don't understand what's actually happening. But when you have all of the settings and everything else to look for longs that day, this is exactly when you can start focusing on this type of situation right here. Looking for near kill zone continuations. This is when having this zone on your charts gives you a lot of confidence to look for that exact continuation. And this very tiny looking triangle form right here, from this high to this low to this high again, this formation on execution timeframes would be just one market maker buy model right here. This being the sell side of the curve, this being the buy side of the curve. So as we are here on 5 minutes, we can drop, let's say, to 1 minute. So now looking at this type of situation, looking at this sell side of the curve, we can't really spot fair value gaps that have been rejected and retested for quite a few times, meaning that even though we have a few imbalance points like right here, we have this DPR right here, which again acts as a really sensitive and important area. This is obviously then we would mark that and add to our chart. So let's see this bullish imbalance filled with bearish imbalance. Notice how it will help you on the buy side of the curve. So if we extend that, notice that it gives a few rejections to the downside, then it gives a reaction to the upside, and eventually it causes this very neat and clear run to the upside again. But looking even further deeper right here, before this original consolidation was even formed, if you look to the even more respected area type of a zone, notice that looking here, what we had was a couple rejections to the upside, then what we had was 3 rejections to the downside, then another few rejections to the downside that eventually caused this bounce to the upside. Then price broke above it right here. Price pulled back, talking about exact area, it was this DPR right here. Obviously, we would stack that with this inducement right here, bullish order block, these two downside candles right here. So we have quite a few things overlapping, but notice how on this 2-minute market maker buy model, this being original consolidation, we can see areas for the buy side of the curve when we will be looking for long opportunities, then we can have clear areas and clear zones that formed not recently but quite some time ago. So this DPR formed during the sell side of the curve, and this imbalance formed even before giving us the original consolidation. And how we would know it is a sensitive area obviously is because after it acted as support type of a thing right here, notice that after that when price breaks below it, it starts acting as resistance. Here, it starts acting as resistance here. So what we obviously know by now is that this area right here is a sensitive one. And then price breaks that, what we will want to do is use it as support. And then price does that, it breaks above it right here. What from that point we are actually looking for is stacking bullish P race inside of this expansion, but also looking for price to retrace into this exact area and use it as support this time to send price higher and take out the original consolidation. So that is all for this one. I hope it was insightful. Now you know which imbalance points stay sensitive and important going forward. This will really help you identify key strong areas to trade away from. This will help you to get more high probability entries. So I hope it was useful, and we will talk very soon.